Yes, so I'm just going to wait for a few minutes until see if everybody or several people join. Yes, so this is going to be a little bit shorter because of course, the market isn't open at the moment, and technically it's just Bitcoin that is trading at this point, and yes, it's going to be interesting to see what happens to that coming week because I'm expecting it to fall quite significantly. So what I'm going to do today is basically to show you what I basically did on Monday, the video that technically didn't work. I actually don't know why. It only recorded a few minutes of the entire session, which was roughly 1 hour. So I use two programs, so two platforms. So I use the eToro platform and I use this platform, which is TSC2000. And the reason why I use Bitcoin is because there you can trade with commodities, and it is also fairly fun. It's an easy platform basically to use. But in order to trade, if I wanted to trade commodities on the TC2000, that is not possible. You have to, you can only trade currencies, and you can also only trade, for example, stocks and other things and so on. So it's fairly limited to basically what you can trade on TC2000. But the platform is significantly better. For example, if you wanted to trade swing trade or something like that, or even day trade, then TC2000 is much better than eToro. It isn't really made for fast trading because you have to click fairly often in order to get something to trade, and it that just doesn't work when you have to make very fast trades. For example, this you can just use a click once and you buy, click once and you sell, and that way is much easier. And the other platform also lags significantly. So this also has the stocks for the United States Stock Exchange, for example, the Nasdaq. It has the S&P 500, the Dow Jones, and so on, and that is technically enough. So if you just take the stocks that are available on the U.S. Stock Exchange, I think it's like 5,000 companies that are registered, and it is technically impossible to take to be on track with all 5,000 companies at all times. So, and then you can add the currencies as well, and you basically have more than enough things to look at. So there will always be good trades in those 5,000 companies, and there will always be technically good trades in, for example, only the currencies. So I basically take track of 5 major currencies most of the time, and usually that is also technically enough. If you have too many trades going on, it's often not often the easiest thing to do. So on my screen, this is my setup, and the setup for TC2000 is also far more advanced than the setup for eToro. You can do some modification for the setup on eToro, but you cannot customize it as you do, for example, in TC2000. It's basically you can do whatever you want with this. So here on the main screen here is basically the currency or the stock, whatever you basically are looking at. So you can look at a Great British Pound, US dollar. Red candlesticks, green candlesticks. This is basically what I basically use. You can have a vast variety of basically different kinds of candlestick. You can have them open, you have them closed, and so on. And you can also customize basically the entire background of this. You can make it blue. You can basically make it any color that you want. I just think black is easier to basically see what is going on when it's basically a black background. Then I have also all the moving averages. You can basically have them here, and you can have countless of them. So I have the 50, 150, the 200, the 220 exponential moving average, the 40 exponential moving average, the 100 moving average, and the 300 moving average. Sometimes I also use even some smaller, like the 5 and 10 moving averages, and in some cases also the 500 moving average. But for most of the time, these are basically the moving averages that I use. So if we go to the stocks, for example, if we take the S&P, S&P, you also get the volume here. And volume is not something that is available in Ethereum, strangely enough. I at least haven't found it. But volume is very, very helpful when basically to see whether or not, for example, big institutions start trading. Because when they start trading, things really move. For example, if you look what happened back in March and April, when they had this massive fall here, roughly 33%, I think it was the fall. You can see how much volume is here, and volume is basically an indication of you have massive amounts of trading going on, and that usually means that big institutions, banks are basically moving their money, and when they move their money, you should also try to move your money, because a market is basically based on their movement and not on retail investors and so on. So underneath here, I have the MACD, I have the RSI, and I have the CCI, and here we have the Bollinger Band, and here we have the stochastic. So also these indicators are far more advanced. For example, if you can see the stochastic, it's a far more advanced stochastic than, for example, in Ether and so on. So this platform is a professional platform for traders and so on. And Ether, technically their charts they're technically really bad. They're useful, but they're not very good, to be fairly honest. Subsequently, you also have the Fibonacci, basically everything that has to do with Fibonacci, the normal Fibonacci here, and then you also have the Fibonacci projection. But the things that I'm going to just show you today is basically how you find the best stocks to trade. So if you have, for example, this basket of 5,000 companies that you're looking at, how do you find the best trades for a given day? And the way you do that is basically what you call a scan. So you technically scan the market for different conditions. So some of the conditions that I like to look at is, for example, when the Bollinger Band when you're trading way outside of the Bollinger Band on the top or way outside of the Bollinger Band at the bottom. That's a really good indication that this stock or currency is way overstretched, is way oversold, or way overbought. That's one condition. Then you also can look at, for example, when the MACD is crossing the signal line. That's also another condition. And for example, when the RSI is above the 72, underneath above 70, or underneath 30. You can also look at those conditions. So when I decide to enter a trade, I want most of these indicators basically pointing in one direction. Or I want these indicators, for example, upwards, or the indicators are basically going down in order to determine whether to buy or in order to determine whether to sell. So that at least, for example, if you can get all of them, then yes, that is fantastic. But at least 3 of them should be showing the same thing. Sometimes you have indicators that basically go opposite of each other. You can have the MACD going down, you can have the stochastic going up, and then you just go, okay, which way is this going? So if we take just an example here, if you just want to this is Microsoft, you just want to analyze Microsoft, whether or not this is a good trade to enter for a buy or enter for a short. So first of all, you can see it here at from the moving averages. It is bouncing off the 20 exponential moving average. It has found support here. If you look at a MACD, it is still above 0, and so it is bullish and is basically about to cross the signal line. So it is going to continue rising, but you're going to have some downwards momentum in that rise. So you can still be rising and have downwards momentum at the same time. So we have the RSI here. It is at 72. Conditions for overbought is above 70. So it is overbought at this point. And usually never buy something that is overbought because the probability of its declining are far higher than the probability of it rising significantly more. So just keep that in mind. Here we have the CCI above 0 is considered bullish. Above 100 is considered significant bullish, and so on. So we're about 0 here, but we are declining. Stochastic is also declining. We see the green line here above that is basically bullish. Underneath that is, and going downwards, is considered basically bearish. So we have at least this some of these indicators showing that this is most likely going to fall. So even though we see this this pullback here in the 20 exponential moving average, it is fairly likely when you look at this, especially the RSI, that this is going to fall further. So we can look at the bullish band. The reason why we fell is because we've crossed the top of the bullish band. So this is a really, really good indication whether or not a stock or a commodity, whatever, is going to go one way or another, is whether or not it crosses the top of the bullish band or the bottom. It's a fantastic indicator when you use it like that. For example, if you take the sample of Bitcoin, if you look at the weekly chart for Bitcoin, it is significantly outside of the Bollinger Band parameter. Something that looks like that, even worse. The Bitcoin is basically would be right here. And when that happens, it basically means that too many people are buying this stock or currency or whatever. It is basically being significantly overbought. And things that are overbought are also, you can also say, overvalued. So we can just look at different kinds of stock and different kinds of currencies where the condition is that the price is way outside of the Bollinger Band. So the way we do that is basically you go to Easy Scan, and you can, if you're a good programmer, you can make your own conditions, or you can just use the conditions that are already built. For example, here you have conditions that are pre-built, and we're going to use one of those conditions that is basically pre-built. You can also combine different kinds of conditions. You don't have to use just one condition, you can use several kinds of conditions. In order to do that, you go under New Conditions, and then you go Add Conditions, and you can add as many conditions as you technically want. So we choose a condition here, we go down, and we want to basically see the BB bottom, so crossing up through BB bottom. And basically what that basically means, this condition that is already pre-built, pre-programmed, is that you want a price that has crossed significantly outside of the Bollinger Band and is on its way back through the bottom of the Bollinger Band. That basically what this condition means. So if we press this and then we say Apply Scan, we get a list of companies. So you can choose what basically what market you want to scan. So here is a high cap 1000. You can choose the S&P, the Dow Jones, NASDAQ, and it will basically scan all those stocks for this condition. So now we just found two stocks. So we found two stocks that basically fit this condition. So instead of going looking for all 1,000 stocks that are in the high cap, you just found two within a few seconds. So we look at this, and the idea is it doesn't really matter what the company is. because you're just looking at technical indicators. It doesn't matter what the earnings are. It doesn't matter what basically you're the company you're basically trading. You're just trading based on the indicators for this stock. So you can see that this stock went way outside of the Bollinger Band and then got inside the Bollinger Band again, and then it rallied. So this is not a very good stock to start now. The rally has already gone. If you wanted to enter this stock, you should have entered it here when it was way outside. So you can also see it touched the 200 moving average here. It found major support at the 200 moving average. And if you wanted to enter this stock, you should have entered it when it basically hit this 200 moving average and then basically see how far it would go. Usually, when it goes outside and rallies, it goes to the 20 moving average here in the middle of the Bollinger Band. In this case, it went way past. It almost went to the top of the Bollinger Band. So if you entered the stock here and bought it, you will basically make a profit of 2.3%. That's the gain in this stock. And yes, that is basically how this technically works. It is a very, very easy way to find profitable stocks or stocks that are about to rally. If you look at, for example, the other indicators, it is fairly likely for this stock to rally further. So we know that the 200 moving average is the bottom. So if this turned around, we most likely will find support again at the 200 moving average. If you look at the technical indicators here, they are all of them most likely turning around. They are all still negative. They are very bearish still, but they are turning around. So the CCI, the MACD here is turning around. The RSI is turning around. The CCI is turning around, and the stochastic is turning around. So it may take a while. We may have a little bit of a pullback to this moving average here, which is roughly 110. But after that, this should rally to at least these previous highs here, which should find some resistance here of roughly 59 and so on. So that is one way to do it. You can look at this one as well. It's the same condition. We went way outside of the Bollinger Band and then we rallied. And at this point, we are just above the lower part of the Bollinger Band. So whether or not this rallies further, it is fairly likely. It basically created a hammer here. And when you have this hammer candlestick here, it basically means that when price got down to $45.91 per share, buyers came in and bought quite a lot of this. And if buyers are coming in at this price, it may well be that they are going to pressure this. They think that this is a really cheap stock to buy at this level, and therefore they are buying it. So you can also look at where we have found resistance in the past, because knowing where we have found resistance in the past may be a suggestion where this price is probably going. So you can see here, when we basically hit the 20 exponential moving average, we found quite a lot of resistance. So in between the 20 and the 40 is basically where we found resistance 2 weeks ago. So we fell towards 45, and if this is an indication, it may rise roughly to the 20 exponential moving average. That's roughly 3.2%, give or take. And that means that we may see this stock rally up towards the middle of the Bollinger Band before it starts declining again. So this is not an indication that this stock will completely turn around. It doesn't mean that we'll have a complete turnaround and we'll head towards these highs. It is still in a downtrend, but it is a way of basically catching this fall. So we can look at the NASDAQ, whether or not we have any companies there. There's no company that has that condition. S&P has one, and that's the same company here. So there are only two companies in basically the 1,000 stocks that we checked in the S&P 500 and also the NASDAQ that fit this category. So you can look at some other things. For example, you can check when the MACD is crossing the signal line. That's also a very good indication of when a stock is going to rally or when a stock is about to decrease. So we go back to the conditions here, new conditions, add conditions, choose conditions, and then we go down to the MACD, which is pre-built. So this one says MACD, X up, signal line. And what basically that means is that we want to check stocks that are crossing where the MACD is crossing above the signal line. That's what we want to look for. When we check this is basically stocks or whatever you basically instruments that are rallying. So when it crosses the signal line to the upside, it is an indication of a rally. So if we check this and use the scan, we can see that we have found several new stocks, quite a lot, 42 stocks that are basically crossing the signal line. So if you look at, for example, just the NASDAQ, which is only 100 stocks, we can see that we have found in the NASDAQ 7 stocks that fit these conditions. And 7 stocks for a day, that is more than a handful. So we have the first one here as AEP. So you can see that what we're looking at is basically this. It is basically the MACD crossing above the signal line, indicating bullish momentum. So this stock found bottom here at $80 a share. It has since then rallied all the way to 83. And the question then is, will this rally further? And if I were to estimate this, I would say no. It's highly likely that we will find quite a lot of resistance around this area here, which is at 84, because that is basically what happened in the past. So this is probably not a good stock. So we can just look at the next one. We can see that this one also, the MACD is crossing the signal line, but still there's a lot of massive resistance above. So it's fairly likely that we have lost this rally. It is basically too late to enter this market. Then we can go to the next one, EA, and this looks more promising. So we are above the moving averages. We are trading at 143, and you can see that MACD is basically on the signal line. It's basically indicating that it is above, but that has to be right above the signal line at that case. And whether or not this is a good stock to buy at this point, I would still say no. And the reason for that is because the RSI is at 71. Not a very good stock. It may fall. If it falls towards the 20 exponential, roughly around 4%, then yes, it will be an interesting stock to basically enter, because we are in an uptrend. We have been for a very long time. It bottomed basically down here, and then it rallied all the way. So in this case, you basically need a pullback towards the 20 exponential in order to basically buy into this. So we can look at the next one. That is this one. And whether or not this is a good stock, well, it is kind of, but there's still not all indicators that are showing that this is a very good stock to enter at this point. The reason why I say that is because, for example, the MACD is showing that this is bullish. We're above 0 and it's crossing the signal line, which is basically the indication that we're using. The RSI is bearish at this point. CCI is flat. The stochastic is bullish, but the Bollinger Band, we're outside here at the top of the Bollinger Band. So in this case, it's very, very likely that this is going to drop towards the 20 exponential. That's a drop of roughly 3.6%. And when it does that, then it's possible basically to enter to buy the stock. So we'll see something similar to this occurring. And if you found support at the 20 exponential, then it's possible to buy into it. So this is a stock that has been slowly going up and forward for quite a long time. It bottomed down here at 71, and it has rallied roughly 50% since this was back in June. So pullbacks towards the 20 exponential in this case, That is basically your entry point. You could, for example, enter here, but it only means that it will most likely drop towards the 20 exponential and then rally again. So it's better just to wait for the drop and then buy into it. So you can look at the next one here, and this is looking more promising. So what company is this? This is EXC, Excellion Corporations. And the reason why I say that this is more promising is because there's more room to the upside. We can see basically by the support line here that this area is very supportive. It is very unlikely for this stock to drop further than this area here. And we are just above that area. So knowing that, you can look at the MACD, is just above the zero. So very good. It's crossing the signal line to the upside. We can look at the RSI. It is at 60, so there's still a little room to the upside. CCI is just above zero, but it is increasing. Stochastic is basically under the signal line, but it's about to turn around. And we have bounced off the 20 moving average here in the Bollinger Band. So this is a stock that is fairly interesting. We saw the highs here are roughly at 46. We're at 42 at this point. So if we rally towards the very highs there, there's roughly a 9.1%. But the most likely thing that's going to happen here is that we rally to these previous highs. So 33.2, that's roughly 2.23%. That is most likely where this will find major resistance. And at that point, the RSI will also most likely be above 70, and therefore it will start to decrease again. What we'll see here is that the price level will also get to the top of the Bollinger Band, and when we do that, it will look something similar to that. Getting above the top of the Bollinger Band will basically drop it back down. So it is possible to buy, in this case, at the level and target these highs. It's not a massive trade. You can have your stop loss in order, and you don't have to use that much leverage. But it is fairly likely that we'll go to this level and then drop again. So there are two left here. There's Fox, it is left. This one has also conditions where we trade above the signal line in the MACD. And if you look at this, whether or not this is a good trade, I would say no straight away. The reason for that is that we are running into major resistance at the 300 moving average. So here we ran into resistance at 200. This is the 300. This is also the 300. And now yet again, we are getting rejected at the 300. So even though we're crossing the signal line here, it is more likely that this is going to drop towards the 50 or even the 200 moving average before this goes higher. So it's an interesting stock to trade when you know that the 300 moving average is so resistant, because every time you get close to it is basically a short. So the bottom of this market is roughly here at the 25, and the top of the market is basically the 300 moving average. So it's basically a ping pong game, like a channel. So every time we get to this level, it's possible to buy. Every time we get to the close to the 300 moving average, it's basically a possibility to sell. So let's look at the last one. So this is also Fox A, and it's very similar in its structure. So this is also one way to do it. It's you can also look at, for example, the S&P 500 for this scan, and then you'll get far more companies, for example, 33 companies in the S&P 500, which have these conditions. So instead of basically looking at all 5,000 companies, you look at 33 companies or 2 companies or something like that. And then you basically pick the best companies that you think will go your way. So one of the conditions, basically looking at the 50 moving average. So the 50 moving average is this red line. So it's basically the red line here. So trading above the 50 moving average is considered being bullish. Trading underneath the 50 moving average is considered being bearish. So you can basically test that condition for bearishness or for bullishness. So if you go for the easy scan, new conditions, and then you choose the pre-built conditions for price, you can have it in two ways. For example, price below the 50 moving average, and when you scan for price below the 50 moving average, that basically means that you're scanning for something that you want to short. If you want to scan, for example, the price above the 50 moving average, so it is basically here, price X up 50 moving average, then you're checking for stocks that are rising or that are bullish. So we can do that. So we do the scan. We get the companies here. There are 28 companies in the S&P 500 that are trading at the moment above the 50 moving average. And that also means that in essence, there are 28 companies that are considered being bullish at this current stage. So we can look at the first one. This is Molina Healthcare. And of course, everything that has to do with healthcare at this current stage is fairly bullish. So this is a very interesting trade. If you were looking at this on the last trading day, then this would have been a very good trade. It's probably gone at this point. So this stock is finding a major support down here at the 100 moving average. So, if you get close to the 100 moving average, this is definitely a buy. So our condition is basically we want to see stocks that are trading, the price is trading above the 50 moving average, and it is currently doing that. So the 50 moving average is here at 207, and we're trading at 212. So you can look at, does this stock have more momentum to the upside? Are we going to see the stock going significantly higher? And my answer to that would be yes, most likely, but not a lot. And the reason for that is because the RSI is at 62, and when we get to 70 or about 70, this will basically become overbought, and it will start trending back to the downside. You will also see that the Bollinger Band, you basically hit the top of the Bollinger Band, and that will also pressure the thing down. MACD is looking healthy, is crossing the signal line, so is the stochastic, and so is the CCI. So all of these indicators are showing that this is going to go higher. But the question is whether or not how high it will go. And my guess would be the top of this previous candlestick here. So roughly an increase of $4. And whether or not that is a good trade, no. 1.57%, that is basically what you could expect out of this trade if you were trading it at this current stage. So you can look at the next one. This is yet again trading above the 50 moving average, but it's a terrible stock to basically start trading because there's a lot of massive resistance here above. So if we were to get to the 300 moving average, that would definitely be a short. So at this point, no. So you can look at this one, the same thing here. We're still trading above the 50 moving average, but still, this is still a stock that is trading sideways or basically trading downwards, and it's not a very good stock to enter. So this one looks much more promising. So we found support at the 100 moving average. This looks like Netflix and Facebook, but it is not. This stock found major support here at the 100 moving average. It has rallied above the 50. If it starts trading above here, another green candlestick, then is a very high likely that we'll go and test these previous highs. So the RSI is at 64. It's fairly high. The stochastic is turning around. The MACD is flat, and the CCI is basically flat. But if you look at the Bollinger Band, we have crossed the middle of the Bollinger Band, and usually that means that we are going to round off to the top here, to the very top of the Bollinger Band, and that is roughly at $41 a share, roughly the top of this. You can see this level at the same time. So if you started trading here and traded to the top, that's a trade of roughly 5.6%. That's a fairly good trade of having 6% in roughly 5.6% in profit. So this is how you basically find most of these stocks. There's one problem. If you wanted to use this system, you probably find other systems like it on the internet, but this is the system that I use. This has all of the stocks that are available on the US stock exchange, while eToro does not have all of the stocks. It has the best known stocks, most of them from the S&P 500 and also the NASDAQ and so on, but does not have the small cap stock or penny stocks and so on. So just keep it in mind, you can find a really good stock, for example, in this scan, and then when you want to trade it in eToro, it is not available. So that is a bummer, basically, in most cases. So then you can also do combinations. You can do your own conditions, several of them. So if you want to find, for example, a stock where the RSI is going above the 30 line, becoming basically bullish, and you have the MACD going above the signal line, that is basically two indicators that you usually look for in order to see a stock that is rallying. So in order to do that, you can basically look at, for example, the MACD going above the signal line. You can choose that condition, and then you can just add more conditions. For example, you could add the condition where we're trading above the 50 moving average, for example. So if you go down towards that condition, which is here, you have both the MACD condition and the price crossing above the 50 moving average. So it's not a guarantee that you'll find a stock, but if you do, then you have two conditions that you usually look for that are that you basically get straight away. So you can have a look, and voila, you have 4 companies here, or 4 stocks that have both of those conditions. So the first one is STE. You can see that the MACD is crossing above the signal line, and we are trading above the 50 moving average. So both of those conditions are filled, and therefore you have this one and you have this one. But the question is this a good buy? And you can look at the RSI, it's at 49. That's good, it is bullish. CCI is bullish, the stochastic is bullish, and there's still room to the upside in the Bollinger Band. Roughly, if you look at this, around 1.7% increase before we basically hit the top of the Bollinger Band. So yes, it is a stock that you could enter. It looks very bullish. You could basically, the best thing here to happen is basically pull back towards the 50 and then rally again, and you will get an extra percent in increase. But it looks like a stock that is basically turning around and will test these previous highs again. And that is roughly a trade of 3.7%. So we have this one, Bio, it's the same thing. We have MACD crossing the signal line, and we're trading above the 50 moving average. And you have a RSI that is 61. CCI is bearish. Stochastics crossing the signal line, very good indications. And you are about to go and test the top of the Bollinger Band. So very good indications for the stock. Most likely we'll find resistance here at 609. So that means that it will increase roughly 4.2% before it finds resistance. So that is a plausible gain of 4.23%. So let's look at this one. This is also, and this probably has rallied enough and will most likely find resistance. It will most likely find resistance here. You can see how close we are at the top of the Bollinger Band. So yeah, this probably isn't the best one to look at. So you look at this one, and here the problem is, it is we are rallying, yes, but it's fairly unlikely that we'll cross all of these resistance above the moving averages. It is fairly unlikely. We may go to the 100 moving average and then fall. So this is not a very good stock. But this one is good, looking good, and this one is also looking good. So that is basically two conditions that have left us to two stocks that are um, have a high probability of investment or profitability. So we can add, for example, the last one, for example, three conditions. We can look, for example, when the Bollinger Band is the MACD is above the signal line, and we can also look, for example, at after the RSI. So we, for example, have the stochastic here crossing the signal line, cross over the signal line, and that basically means that it crosses the signal line here. So we can use that indication. So these are two of my favorite things to scan for. So here you have the MACD, the red line crossing the signal line, indicating bullish momentum. And then you also scan for the stochastic, the blue line crossing the signal line, also indicating bullish momentum. So you can look at this, scan, and we find three stocks that are considered being very bullish at this stage. So FTV, you can look at that. You can see that the RSI, the MACD is crossing the signal line, and the stochastic is crossing the signal line. Whether or not this is a good stock, no, not really. And the reason for that, you can see here in the Bollinger Band. Even though both of these indicators show that we have bullishness, that bullishness most likely has gone at this point. It is very likely that when the market opens, that this will drop towards the middle of the Bollinger Band. And therefore, I would not consider this to be a buy at this point. It is just too overstretched in order to buy this. So you can see here, when we got way outside of the Bollinger Band, we basically broke down, rallied again, got close to the Bollinger Band, and then basically broke down all the way down to here. And this has happened also here, outside of the Bollinger Band, broke all the way down to the lower part of the Bollinger Band. So I would not consider this as a buy at this point. So EA, for example, we can see that, yeah, not very good. That's one either. We'll just look at the third one. So this one is looking better. So here we have a crossing of the MACD, crossing of the signal line. Both of these indicating bullish momentum. We have roughly 11 points to being overbought, so that is also okay. This is bullish. This is also bullish, but we are also hitting the top of the Bollinger Band. So you have to take everything into consideration. Even though these indicators are looking very good, this could basically be a massive warning that we are getting overstretched. A pullback towards the 20 is basically what you should be waiting for here, or even better, to the lower part of the Bollinger Band. So this is how I basically look for different stocks, and you can basically check this the day before, just the hour before the stock market opens, and then you can prepare your trades in this way instead of going through all of the stocks or just guessing something. And then this is a far better thing to do when considering to buy something. You can look at, for example, also at the foreign exchange here. This is the Forex market. Do the scan. There's nothing in the foreign exchange at this current stage. So market starts again on Monday, but this will on Friday, when we're going to have trading live on the market. I'll basically start with this, basically show the scans and so on, what basically stocks and exchanges I'm looking for, and then we'll use those. I will use those scans in order to buy when the market opens. So hope you find this helpful. It is going to be a very interesting year because it will most likely be a lot of stimulus, and that will most likely lead to a very bullish market. So hope you find this helpful. You can just write to me on Patreon if you have any questions. Otherwise, good weekend.